Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. Back in January this year, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to find it. In this video, I looked back and found a very relevant technical pattern for the actions seen since mid-December last year. That key piece of evidence is recreated here on this daily chart, and is the bright red 2009 to 2016 bullish shift pitchfork. And the specific key piece is the bright red upper time, currently at 13,434. That sits just underneath the market. This bright red upper time had capped prices, despite one occasion, from December last year until early May this year. It was a key piece of overhead resistance, and the only piece of resistance seen here since the break upwards at the end of last year and the start of this year. Thus, I started looking for the next pattern, and we have three possibilities. The first new pattern ideas already emerged 5 weeks ago with the dark blue November 25 to March 26 bullish Andrews pitchfork. Interesting, the market tested the dark blue lower time, currently at 13,717, virtually from day one, but only finally pierced it late last week. And it looks like this piercing may just have been a breach, as the market is moving back up yesterday, but seems still to be below it at the moment. This push towards the lower time prompted me to draw something I am usually loath to do at the same time, which is a shallower purple bullish shift pitchfork for the same move as the bullish Andrews. So far this has worked well, as prices are just under the purple middle time, which is currently at 14,031. Indeed, I suspect that the narrowing of these times may have prompted some of the action we have seen since early May. I also note the time crossover just happened on the 29th of May, and I caution about the possible volatility we see as we approach the next crossover on the 25th of June. Finally, there is one other pattern to look at here, though it is one I am somewhat uncomfortable with. You see, we may have had a sharp move back on the 29th of January, which allows me even to consider such a pattern. But this sharp move up is not ideal. Nevertheless, we may have a possible late December 25 to early May 2026 reverse head and shoulders pattern, a pattern that is usually considered bullish. The bright pink neckline for this pattern is so close to the bright red upper time, which is currently at 13,434, to basically be indistinguishable. We are above the bright pink neckline now, and I will lay out what I consider potentials right now, not targets as yet, potentials for the move higher. Thus, a primary potential will be up in the 14,747 area, thus above the high of the market, and a secondary hardest reach potential will be up in the 15,271 area, close to the top of my daily chart. I have doubts about this pattern, and I think it's the weakest by a country mile of all the three ideas mentioned. LME 3-month aluminium. The market here originally moved up from what was a bright green April/May 2025 bull channel that morphed over time into an April/May to date very large bright green rising expanding wedge pattern, and that's currently 31.28 to 36.72. However, after January this year, and especially after March, the bright green upper time became more of an attractor, and this tied in nicely with the more recent pattern development of a bright red start of February to late March bullish shift pitchfork. Specifically, the bright red upper time, currently at 37.92 and the bright red middle time, currently at 35.64. Now, they've been acting as ersatz bull channel, and to be honest, quite a good one as well. However, we have pierced the downside of this, so start looking at potentials below, but not just yet. It's still a little bit too early. The green upper trend line slotted down the middle of these two, hence the role as an attractor. Now, I originally drew this pitch hook as a more acute bullish Andrews pitch hook, and this did okay until the middle of last week when prices broke down out of it, which is why we have this ersatz bull channel. Looking above, the market last week made a weekly key reversal down, which was not really a surprise, as prices had peaked up not only the bright red upper time, but also the recent 50% projected Fibonacci line at 37.61 and been rejected by it. However, I do not believe that this will be the end of attempts higher just yet, though it is looking very much more as if we're going to have a go on the downside. As long as highs form a double top, found in March in 35.46, the one that we saw originally, that 35.46. If we manage to hold that, which we don't look like now, then it'll be okay. But it looks like it's finally giving way. Finally, it would be remiss of me not to mention the purple middle time below, currently at 34.63 of the very large November 2015 to April 2020 bullish Andrews pitch hook, and it would not be remiss because that's where we have stopped today. This pattern is still in operation, as is the upper time, which is above the top of my market, but keep a very close eye on that purple middle time, because I think that may be a halting action for what's been the latest move lower, especially after that weekly key reversal down. LME 3-month lead. In the recent past, the pattern I was most concerned about was the dark blue neckline, currently at 1967, of the small January-based head and shoulders top, and that's coming back into the 4 again. However, the market punched up over this neckline, instead gave us a new pattern, and a bright pink April-to-date bull channel, currently 1984 to 2058. This has as nearby support of a possible dubious nature the gold long moving average, currently at 1988, whilst above is congestion between 2001 to 2003, which I thought might cap prices, but seemingly is not that strong right now. Better resistances are at 2021 and 2036 to 2039. The latter contributed to the pipe top seen last week, along with resistance from the bright pink upper bull channel line. This brings me to my point. Well, before we go there, we've now broken through that bright pink bull channel, and we're down to testing that dark blue neckline again, and I'll be very interested to see if we manage to hold it. Now, back in mid-May, we managed to do that with a pipe bottom, so just keep an eye on it, and especially also we have at the same time the mauve medium moving average. But if you're going to hit two or more moving average, because the green moving average, which is not really highlighted, the short medium one is underneath there as well. If you're going to hit something at the same time, then you can hit out two moving averages and also a neckline at the same time, if you manage to get it down below that dark blue neckline. So watch out for that. But this brings something I've been making here as a point for well over a year. It's actually from the start of 2025, and I'll continue to do so going forward. You see, at the end of December 2024, we saw the market had created a very large and rare annual key reversal down in LME 3-month lead. Since then, well, we haven't really done that much, especially compared to the other metals. Indeed, prices are about, what are they now? About $30 above higher today than they were at the end of 2024. So it's not done really that much pushing it lower, but it's certainly held down any rallies. Now, this is not an endorsement of the annual key reversal down, but neither is it a repudiation of it. And so I still say, even now with prices where they are, that one should still look at all things going forward in this year and beyond, here in this metal, in the shadow of this longer term bearish pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.